It's Tuesday, May 11th, approximately 1:45 a.m. now. This is going to be the analysis of the S&Ps. As you can see, we're looking at the 2-year daily chart of the S&P 500. This is the cash market. All right. So we have our trend line here from the March lows going up to the most recent trend swing low and coming through our current price action here. We also have this support resistance level at 1150, and then we have this recent swing low, I guess you could call it, in the congestion we had recently, and that's approximately 1180. All right. So the question is, what are we seeing now? Well, as you can see, last week we had this monster candle here, this monster move, and we managed to close below this rising trend line and also below this most recent swing high. So we said that, this week most likely we would see some sort of continuation down to somewhere near these levels, which would be our next logical place of support, being our next swing low. One more thing we were seeing last week on Friday, we had this candle right here, and as you can see, the high of this candle is lower than the high of this candle, and the low of this candle is higher than the low of this candle. Now this is a inside bar pattern. This could be a reversal pattern, and they're only confirmed upon a break of this high, which we got today. And as you can see, we're able to, price pushed up past this level and also past our trend line, which we breached last week. So the question is, are we out of the woods yet? Well, no, not exactly, and that's because we still have these levels up here. And this level it's at 1181, almost 1182. That's the most recent swing low before we kind of fell through last week, and so we should expect some sellers in this area. Will I be a seller? Absolutely not. And the reason is because if we go back here, you can see on this chart there's there's many places where we had these steep sell-offs, and instead of follow through, the buyers came right back in and bought this thing up to new highs. And so one such place where I guess I learned my lesson pretty early was here. And so as you can see, we have this nice run up, and if you recognize this candle pattern, this is a head and shoulders pattern. So essentially what you have is you have a swing high, then you have a higher swing high, and then a lower swing high. So this shows that buyers are losing momentum, and if we do breach this neckline, then we have a confirmed pattern. So I'll go ahead and drop that neckline in real quick. And as you can see here, we managed to break below it. Now, my mistake here was I entered too early on the short because we did not get a close. So I had to wait for confirmation. And during this time, some people were seeing a bull flag. I'll go ahead and draw that in. A bull flag is just, if you're in a bullish rally here, the market begins to consolidate, and you enter into this kind of channel where you have lower swing lows and lower swing highs. But once the market reaches the most recent swing high, we have a continuation of our previous trend, which is exactly what happened here. So because I didn't wait for the close, I got burned here because I was early. The buyers pushed it back up, and they managed to take out the highs here and continue up. So that's just one example, of where you have to be careful taking your entries and waiting for confirmation. And that's something that really sets the amateurs apart from the pros, and that's waiting for confirmation, not picking the tops and the bottoms, and just taking a piece out of the middle. So same goes here. We could come up here, and it's likely the buyers will take out the highs here and continue to price will continue to rally. Although it seems unlikely, there's no reason the market can't do that. So for me personally, I'm looking for other markets to trade. Forex and gold, those are the two that I've been doing fairly well in. And let's take a look at gold. I have some calls here, and I issued an update earlier today where we had some news come out in Europe, and gold took a little bit of a hit. I think it was down up to 2% at one point. But instead, as you can see, we were able to push right back up and close in this range. Now, to me, that's more bullish than bearish because, we had this down bar here, but we failed to make a lower low here. Another thing I want to point out is the volume here is decreasing on this down line. So there's a good chance that buyers will just step it back up and continue to push through, and that's what I'm looking for. Now, another thing that on a more technical, trend-based perspective, we continue to make higher swing lows and higher swing highs through here. As you can see, we're also above this most recent breakout level. So as long as we can, stay above this trend line right here, and also continue to make higher swing lows and higher swing highs, or higher swing lows and higher swing highs, I have no problem holding my bullish position, and my bias will remain that way. But if we do get some sort of breakdown, I'll have to reassess and take it one step at a time from there. And so that's pretty much what I'm seeing now in the S&Ps. If we go back to this chart real quick, tomorrow, since we closed above here, there's a good chance we might continue to push up higher. This is a nice strong close. We have no wick on the bottom side and very little wick on the top side. So there's a good chance we make it up through here, but there's very many places of near-term resistance that we will get held up on in the meantime. So it's going to be interesting to see what the S&Ps do. But that's it for now. Thanks.